course of my life, 55 years, Wall Street really has been the commonly recognized measure of economic health. Like, how's the Dow doing? We've got entire TV channels devoted to tracking its progress, which has mostly been up during the course of my life. So if the average of, the equity averages fall, if the stock market falls, that's seen by a lot of people as like a measure that the economy itself is in decline. Do you think that's a fair measure?
Look, the market goes up and down. Warren Buffett has a saying, in the short run, the market's a voting machine. In the long run, it's a weighing machine. And in the long run, it's going to weigh, do we have good policies?
Yes.
And, I in my former business, I commented on market structure, market ups and downs a lot. I'm trying not to do that.
Yes.
But for everyone who thinks that these market declines are all based on the president's economic policies, I can tell you that this market decline started with the Chinese AI announcement of DeepSeek.
Right.
So the so-called MAG 7, the tech stocks, had been doing very well for about 18 months, led the market, and I think that there was kind of a real dose of reality in what was going on in AI. And I think U.S. is going to remain the leader in AI, but the AI-related stocks started coming down. So, like, if I were to analyze in my old hat, and this is the only time I'm going to talk about it, my old hat, what's happening with the market, I'd say it's more a MAG 7 problem and not a MAGA problem.
Right. So it's a deeper, so actually the markets are, you're saying in this specific case with tech stocks, are taking like a real measure of the value of companies relative to foreign companies.
Well, it's that. But if we look with the equal weighted S&P, even after today's move, down 4% in the year, or, in a long-term chart, you wouldn't even notice that.
Yeah.
And I think the most important thing that we can do, that I can do as the Treasury Secretary, that President Trump wants to do, is put in sound fundamentals for the underlying economy. And if the underlying economy is good, if taxes are stable, if businesses have predictability, if we have cheap and plentiful energy, if we deregulate, if we treat our workforce well, then we're going to have a great stock market.
Fair. So last questions about markets, equity markets, the S&P, the NASDAQ. That seems, that's the main measure that the media use to gauge the health and trajectory of the economy, as you know. So, there are shows on TV just about markets. Do you think that's an accurate measure?
So the answer is no, and it's particularly true in the short term, right? Because the markets are affected more by the Fed than they are other things. The market's basically affected as much by, they're going to have interest rates go down as it is anything else. I think in a general way.
That's kind of, can I suppose that's a little weird, actually. Markets are supposed to, equity markets are supposed to reflect the value of the companies in which you buy equity, right? So it should be like, the measure should be like, how's the company doing? Right.
And it's very often, but
it's kind of weird for the Fed.
It's macroeconomics. Yeah. What the notion sort of is that, well, if the interest rates go down, you're going to have economic activity increase. So it's not crazy, but it's sort of off-centered. To me, long term, it's fair to say, what will the markets do, right?
Right.
Will these companies become richer under this system? American companies become richer under this system? The metric for me is, did workers get richer? That's the metric for me. But if that happens, it should be reflected in the market. And so I think looking at a short term is very disruptive, very destructive, not right. Looking at a long term makes some sense, but it's not my metric. My metric after national defense, my metric is, do most Americans do relatively better? And if they, in real terms, and if they did, the country is better off and the economy has done what it is supposed to do. I actually, this is sort of in 1996 when Bob Dole, who I worked for, you'll remember, as chief of staff when he was chairman of the finance committee, I wrote a speech that sort of made this point. that look, the purpose of an economic policy is to generate wealth for the midsection. The rich they'll take care of themselves. The poor you have programs for, but you want to this is the purpose of it.